Hey, good evening, everybody. Good evening, and welcome, traders and investors, to Admiral Markets Market Pulse Weekly Update, number 32 for the 25th of June, 2025. It's Paul here. Once again, it has been a rather eventful week in what has been an eventful year. I did say this in January that we were in for an eventful week. And the good part of that means that it gives us lots for us to talk about later on in this evening's session when we take a look at the actual live market. So be sure to stay with us for that. As always, I just want to make sure that you can hear my voice, you can see me, you can see the slides, that the technology is working in our favor. That's always a good place for us to start. As always, we start with a quick risk disclaimer, so you can take a moment to make yourself aware of that. Just remembering that trading and investing on margin does involve risk, and that ultimately you are responsible for your own trading and investing decisions. Okay, so what do we look to cover on our Market Pulse weekly update? Well, most importantly, what we want to do is to help you understand and analyze global financial markets. As I've said many times, we appreciate this is a rather eventful year that we find ourselves in, and the last couple of months, the last week has been very eventful as well. And we appreciate that if you are at the start of your trading and investing journey, that perhaps it might be a little bit intimidating or a little bit overwhelming to try and make sense of these volatile and eventful markets. So we are here to help you understand and analyze those global financial markets. Most importantly, what we want to be able to do is to help you in terms of investors and traders. How can you turn that analysis to your advantage? How can you turn it from a threat into an opportunity? And as always, we'll touch upon the various ways that you can trade and invest with Admiral Markets. So there's always plenty for us to cover. We are never short of topics or instruments to discuss. But as always, if you're here, if you've got a couple of questions, or even if you're watching this later on demand, if you have questions or comments, please feel free to either add into the comments or drop us a note. We're always intrigued to hear people's feedbacks and thoughts. And if there's topics that you'd like to see us focus on in future sessions, by all means, we'd love to hear that. For those of you who don't know me, my name's Paul. Traded and invested for many, many years. Traded for funds, traded for clients, primarily in my FX way. Okay, on my FX pathway, or rather my trading pathway, I like to focus on trading FX, indices, and commodities. I tend to be a trend trader for longer term swing and position trades, and a reversal trader for my shorter term intraday trades. When it comes to investing, I'm very much driven by a sort of intuition and also a particular sector focus. And we'll talk more about that as we go deeper into our session and look at the live markets. I appreciate that as well as people joining us who are at the start of their trading and investing journey, you may well be at the start of your journey with Admiral Markets. So we always include a couple of slides just to help educate people on who Admiral Markets are and how they can help you on your trading and investing journey. Admiral Markets are a financial brokerage that provide a wide range of financial instruments and various asset classes at your disposal. They also provide a comprehensive education suite that will help support you in your journey. In terms of the educational content available to you, you'll find there are always regular webinars with market experts. There's always sessions like this one, providing with live market analysis. You have access to the premium analytics portal. You also have access to the research terminal, which plugs into the Admiral Markets MT4 and MT5 platform. And there is a wide range of educational content available on both the Admiral Markets website and also the Admiral Markets YouTube channel. For those of you who are choosing to focus more on their trading pathway, Admiral Markets provides access to over 4,000 available instruments as FX and CFDs on commodities, indices, and stocks. That provides you with a sophisticated trading environment with standard leverage for retail clients, providing you the opportunity to access and engage with markets through both the MetaTrader 4 and MetaTrader 5 platform, and also the ability to utilize the Admiral Markets mobile app for those of you who like to trade on the go. In terms of the investing pathway, well, once again, you're provided with over 4,000 available stocks and ETFs that you have access to. You also have the opportunity to engage in fractional investing in terms of fractional shares and fractional ETFs. You have an auto invest capability in the mobile app. And in terms of platforms, you have the ability to download MetaTrader 5. There is also a web trader version of it, and also the Admiral Markets mobile app itself. So, as I said at the start, Market Pulse Weekly Update is all about helping you navigate through these rather tumultuous and volatile weeks, months, and year that we find ourselves in. We do recognize that if you are at the start of your journey, it could be a bit intimidating, could be a little bit overwhelming. And so these weekly webinar series is to help you navigate your way through the global markets and filter the information that comes our way. So every week we take a little bit of a look at the major themes, the major news, the major narratives that are affecting the markets this week and for the next week, okay, through till next Wednesday. We'll always provide analysis of the major global markets, always open for a conversation about trading and investing topics, and also help give you some insight into the tech solutions provided by Admiral Markets UK. Whole idea is to help educate and provide insight in markets and the way that traders and investors can engage with them. So part of it, as I said, is about understanding the week's themes, the week's news, the week's narratives. And it has been a rather eventful week, as I said at the start. Okay, and we cannot avoid that elephant in the room. What I talk about here is always is that if you're at the start of your trading and journey, trading and investing journey, as you hear me say most weeks, I don't expect you to be able to analyze every bit of data, but it is important for you to know when that data is being released, okay? Because when that data is released, then very often it will induce volatility into the market. And volatility is very much a double-edged sword. When you're on the right side of it, it can make your trading and investing session, enjoyable. When you're on the wrong side of volatility, it can make your trading and investing session challenging. So it is in your best interest to understand when that major news is being released. You can find that list of the major news being released on an economic calendar. There is an economic calendar on the Admiral Markets website and elsewhere on the internet. So there's no excuse not to be able to be on top of the economic data being released. But I do appreciate that even with the economic calendar, there is still a veritable smorgasbord of news events that are released on a daily basis. And so what I tried to do here is to try to trim it down to help give you insight into the sort of elements of news that you should be focusing on to help just give you some insight into the overall global market macro picture. So today has been, the start of this week has been relatively quiet. Okay, we have had Mr. Powell doing his testimony to the Senate over the last couple of days. But we did have this afternoon was we had new home sales in the US, and those numbers were decidedly poor. And people start to pick up on that. People start to get interested in that because, if there are people not basically buying homes in a consumer economy, that can give you sort of early warning signs of if there is strife or tension in the overall economy. So traders will be and investors will be keen to see how that news plays out over the next couple of days as we get more of the data coming towards. What we have tomorrow is we have Mr. Bailey, the Governor of the Bank of England. He'll be speaking. He was speaking the other day as well. And of course, people want to see what he has to say about the state of the UK economy. Certainly, he has been leaning towards there being more interest rate cuts in the nearer future. And that naturally has an impact on the way that the UK markets, in terms of equities, in terms of sterling, in terms of the equity indexes, in terms of gilts, etc., how they're viewed and traded. We also tomorrow we have unemployment claims out of the US, and we also have the final GDP, the quarterly numbers. And once again, people will be interested to see what, if any, impact that the President Trump's tariff regime has had on GDP. Okay, is it too early to sort of sense that, or will those numbers be represented in the kind of in the data that we get tomorrow? On Friday, well, we've got in Canada, we've got their GDP numbers, and in the US, we have the what we call the core PCE, Personal Consumer Expenditure Price Index. And this is of relevance and interest because Mr. Powell and his Federal Reserve have in the past used this as their almost their main data point regarding how to effectively curb inflation, and of course the knock-on impact that being how that actually affects interest rates. Whilst it is not as whilst it is not a stronger news release as maybe from 18 months ago, it is still a very keenly watched one. Then on Monday is normally very quiet, but you can see actually we've got this coming up Monday. We've got Chinese manufacturing PMIs, along with the German preliminary inflation numbers. Okay, the last month, the CPIs. Once again, people will be interested to see that there has been over the last month or so. I would suggest that there has been a change of tone towards Germany. The last couple of years has been very negative. Germany, certainly in terms of the economic situation, and it might well be that perhaps we're starting to see those kind of green shoots as the German economy starts to turn. And so, any sort of impact on that from certain numbers will be keenly sort of watched and taken on board. Next Tuesday is the 1st of July, and of course, that means we're into the first week of the month. That means we'll be heading towards non-farm payrolls, not this Friday, but the following Friday. And we start to get an idea of that when we see the JOLTS job openings on next Tuesday. And then on Wednesday, we have the ADP non-farm employment change. Both those are numbers, jobs numbers that have a implication towards the NFP number next Friday, okay, a week on this Friday coming. So it's fair to say that perhaps maybe in terms of quantity, there's not as much data as we may be seeing over the last week, but there's still major data releases there that basically traders are going to be interested in. On top of that, we have almost like an overlay from geopolitical tension, and really, here we are this week. We can't really fail not to mention the events of the weekend. And really, I think we're keen here to stress that, regardless of the behavior of the protagonists in that particular conflict, ultimately, as traders and investors, we're really only kind of looking at it in terms of, do we need to manage risk in relation to that? Do we have exposure? Are there particular ways that we can turn that threat into an advantage? And so we have that geopolitical tension level sitting above the normal data. And then on top of that level, once again, is the kind of level that many of us would allocate to President Trump and his access to people via his social media accounts. We shouldn't underestimate that, okay, that we have seen, huge swings in markets based upon comments that he has made, okay? And so I don't foresee that changing throughout the sort of remainder of his tenure as president. I think that is something that we will see just basically continue. So it is another layer of maybe not complexity, but another layer, okay, another level that is added that we need to make ourselves aware of. Okay, before we head into the live markets and the live charts, okay, as always, you hear me say it every week, I like to be very clear about setting expectations because, when we're engaging in trading, investing, I think it's important to have a few rules and expectations, okay, a few baselines for us to work from. First one of that, as always, is risk management is absolutely key, so you must honor it. If you're at the start of your journey and perhaps maybe struggling to grasp risk management, as I said earlier, there is lots of educational content on the Admiral Markets website and the Admiral Markets YouTube channel. So be sure to avail yourself of that and help you understand and implement risk management because it is absolutely key. As we've just looked at, okay, it's important to know what news is coming out for that week ahead so that you can plan accordingly. Where possible, you conduct your analysis before making decisions. So, I say most weeks as an example. I love to do work on the weekly charts, and so I tend to do that analysis on a Saturday morning, a couple of hours on a Saturday morning. That's when I sit down because one of the reasons I do that is because the markets are closed. Okay, markets are closed. There's no distraction coming from big candles or particular bits of price action. I can just literally focus in on the instruments I want to work on and look at how I can build a plan going forward for the week for some of them. Goes without saying, make sure you've got a good internet connection and make sure you're rested and prepared before your session. And just as a point to note, remember, as for longer term trading investing, we are looking to be long only buyers. So, that's one of the things you just need to be reminded of to take on board. And if you're joining us, new to the journey, new to our sessions, just give you a little bit of insight into how my charts are set up. You'll see I have mostly plain charts, okay, green or blue bullish candles, red bearish candles, a blue 20-period simple moving average, a red 50-period simple moving average, and a green 200-period simple moving average. And I also have fractals there to sort of help me in identifying swing points and particular levels of support and resistance. Okay, before we switch across to the live charts, I realize that many people will understand that Admiral Markets are a trading brokerage, but many people might not be aware that Admiral Markets also provide investing accounts. And what you're able to do is you are able to sort of open an invest.mt5 account. You can do that through your dashboard, okay, on the Premium Analytics portal or rather the kind of client's dashboard. Then you can basically open either a web trader version of MT5 or, as you'll see me, download the MT5 platform. And then you would just use the MT5 platform as you would a normal MT5 platform, but you'll just have the opportunity to go long in the kind of UK shares and ETFs that we talk about here on this session, and that also we show and you can see on the platform itself. All right, so why don't we switch across to the market? Let's see what's going on there. Okay, it's an eventful week. Let's see if we can turn it from a threat into an opportunity. So if you just bear with me for a moment, what I'm going to do is going to switch across the charts, and we'll look at what's going on in the markets. Okay, so what I have here is Admiral Markets MT4 platform. So I say this every week. I have an MT4 platform, which is for, let's say, Trader Pool is my trading pathway. And then I have an Investor MT5 account, which is for longer term position trading or investing. Okay. Remember what I said, the MT5 platform, the Investor MT5 platform is only for long-term buying, okay, for position trading or a long-term position. Personally, as I say every week, I personally prefer to have very hard lines of delineation between my boundaries between here, what I see as my trading pathway, and then also about what I see as my investing pathway. I think it's sometimes a little bit dangerous for people to get their trading and their investing pathways wound up, okay, because it generally tends to lead to sort of challenging sessions and suboptimal performance. Okay, so here we are. Let's bring up the old drawing tool and then let me explain and show you. So this is one of my profiles here. This is an indices profile. So what I've got here is the Dow Jones on the 30, Dow Jones on the weekly, SP 500 on the weekly, NASDAQ on the weekly, ASX 200 on the weekly, which is the Australian index, Hang Seng 50, okay, the Hong Kong index, JP 225, which is the Japanese Nikkei. We have the FTSE 100 on the weekly chart and the German DAX 40 on the weekly chart. And as I say every week, I bring this up because I have these here to give me a snapshot. Give me a snapshot of if there's any particular trends. Give me a snapshot if there's any real correlations, okay, and give me a snapshot of of what markets are actually doing. Are there correlated trends that I might need to be aware of? So let's have a little dig into this a little bit deeper. Okay, right. Let's get rid of this and have a look. So I'm just gonna actually the S&P 500 is probably a good example for this. Excuse me. So S&P 500 on the weekly chart. We talked about how price had been grinding up from those lows, but then we talked about the last 2 weeks were not exactly bullish. Okay, not exactly bullish. And I think a lot of that was the reflection of people's anxiety regarding the actions of Iran and Israel in the Middle East. As I said earlier, we're not here to necessarily debate the rights and wrongs of it. We're here as traders and investors to ensure that we are A, managing risk, and then B, ensuring is there a way that we can actually turn the event from a risk into from a threat into an opportunity. That's what we want to do. And of course, as I said, let's get this old drawing tool here. We had seen a little bit of it's seen a little bit of weakness here the last couple of weeks. And perhaps after the events of Saturday, people might have expected a good deal more. But actually, as you can see here, whilst we did gap down, okay, we gapped down between the Friday and the Sunday, the actual price action, starting the week and running through the week has been quite phenomenal in that sense. And something we've seen across the board. We've seen a real risk on, a real embracing the risk on mentality, okay, across the board for most instruments. And hence why we are seeing things like SP 500 start to actually get quite close to its all-time highs, okay. And I would be very surprised if we did not make it there on the SP 500. Okay, it could take a week, it could take 6 months. Okay, but just being able to sort of see that and recognize that is a bonus. And certainly, we can see Nasdaq, despite all of these kind of wailings and gnashings of teeth, okay, about the situation, we can see that basically as the uh, kind of ceasefire in the Middle East has its impact. What we start to see is that impact in terms of people's feeling about risk, people's feeling uncertain, and we can see basically Nasdaq pushed its way to new highs this week. Get down to the daily chart, we can see, you can basically, see there how we've achieved that. And that's a reflection of some of that sort of risk on mentality that we have at the moment. People sort of saw Trump's strike on Iran, people saw that as markets predominantly sort of voted in favor of that, okay, just because we could see the way they acted and the way they operate and where they basically put their own time and energies. And so that is actually basically, what we're suggesting to kind of as a way and a means, okay, of keeping on top of this, keeping on top of these kind of this data and these numbers, and recognizing that as always, I'm always keen. I'm always very, very keen. Let's just bear with me. Let's just draw this up here. I'm always very keen when price gets to new highs, previous week's highs, previous week's lows, previous year's highs, previous year's lows, all-time highs. When price gets there, how does it respond? Okay, that is what I'm interested in. Now, remember this here, let's get rid of that so you can see. This is, at the moment you might be saying, well, Paul, that's a little bit of it's a bit of a shooting star, it's a bit of a hammer. And I wouldn't disagree with you, that's not exactly bullish, but then remember, this is the daily chart on here. I would be interested to see how does this play out by the end of this week. That's what I'd be looking at. Okay, how does it play out by the end of this week? Do we get close on the weekly beneath the highs, or do we just kind of grind our way and get above that again? That starts to become important. How does the market close on Friday? I think that can tell you an awful lot about that instrument, but also the overall market as well. And to be fair, we are seeing that across all of those American indexes. We've had the Dow here. Let's just see. We've had a strong couple of days on the Dow, okay, strong couple of days in the S&P, strong couple of days on the Nasdaq as well, okay. We've had a strong couple of weeks on the particular Nikkei. It's been a strong week on the Hang Seng as well. So it starts to make us interested to see, well, what's going on there. It's when we start to look at actually, hang on a minute, how are other elements of that society, how are they doing? That you start to get a little bit a deeper insight into the state of that overall economy. So here's what we're going to do here. Just basically, boom, boom, boom. If we look at ASX there, okay, yeah. ASX, we kind of had drifted down for a couple of weeks, having been in a really sort of nice, just grinding its way higher, grinding its way higher, grinding its way higher, grinding its way higher. We ran out of road there, okay, on the longs, and we've just come back to basically drift. Yeah, we have printed a bullish key reversal there, but I'll be intrigued to see does it have what it takes to follow through that and go to the highs. Okay, I'll be intrigued to see whether it can do that, or whether it'll roll itself a little bit. But we've seen, as I said, Nikkei has strung well, okay, as is Hang Seng. But of course, we want to have a little bit of a closer look home. So we've got the German DAX here, and we talked about how we'd had a couple of weeks of us basically rolling off this top. Okay, after this rolling off this top, we might get a week or two going lower. Really, it hasn't really sort of kind of shown itself there in that sense. I would be very surprised to sort of say that is that's conducive price action. I don't believe it is. If I go down to the daily chart, what kind of intrigues me is that there is an awful lot of down candles there, okay, on the DAX. We bounced off the 50, but I'll be interested. We bounced off the 50 and we've rejected the 20. So is it a case of that, is it a case that we are just getting a particular, excuse my drawings there, but hopefully get the gist. As I say every week, I'm a better trader and investor than I am an artist, okay? You'll be pleased to hear I certainly am. But you get the gist, okay? Namely that, is it a case of basically, are we going to bounce our way between that until price gets to the end, and then it really does decide what it wants to do. So certainly in the DAX, I would be the kind of short-term trend is the downside. I would be wanting to see by the end of the week, has this 20 period moving average, power of 20, which has acted as, really fantastic support. We've flipped it. We flipped it from it being support to it being resistance. And I'm going to be curious to see, is it going to be resistance there? Is it going to be resistance there? In which case, what we might see is basically price continue down to that kind of 22,000 level. That would be sort of almost like a measured move in that sense. Whereas otherwise, could we see the DAX get the other side of that 20 and take an assault on its recent highs. Okay, that's what I think people will be interested in and looking for. So that was the German DAX. Let's have a little look, on the kind of the home doorstep. Let's have a look at the FTSE 100 in terms of the UK index, and what's been going on. So what we saw was a real sort of double top create there, isn't it? A double top with a considerable, significant move down. Okay, and the good old days of the TV show Dynasty, what you'd have seen there is a case of once you can't hit those tops, we'll roll over and fall away. But that is not the case here. What I'm seeing here in the FTSE is it could not push to new highs at the moment, and in fact, that price action is very bearish. Now, remember what I said. This is a weekly chart, so this has got a couple of days to play its way out. But if I look at that, we talked about this in last week too, saying it needed to push higher, but it didn't. It roll, and that's what's happening. And personally, I think we are in a position basically to I think we're in a position to basically sort of drift its way, and it's channeled down there towards that about 86.80 level, and then we'd have to make a decision on what's going on. Certainly it's worked its way up there, but invariably it's kind of the last few days has taken the luster off the recent moves from the lows. Okay, so yeah, FTSE is weighing. Okay, it's weighted. It's rolling. It's falling. The question is, will that continue? Okay, will that strengthen? And move higher, or will it just basically give up the ghost and roll over? And that's something we need to be aware of. Okay, so actually, one sort of last kind of little thing I was kind of curious and interested about in the FTSE, which is that a little bit as I was saying, price shifting. Okay, the shifting from being support to now, okay, this is resistance. This is moving averages now. It's flipped it from support to moving up. That is actually an opportunity for me to be short there, okay, to get short off that. That's a very simple way for me to work that. So yeah, you might want to just take that on board and see if you can look at the chart and decipher it and make it work for yourself. Okay, so there's a lot of the indices. Let's have a little look at gold. Okay, I appreciate lots of people trade and invest in gold. A very popular product. You can see, all right, it's been in a fabulous uptrend there. We pulled back a little bit of a bull flag, okay, but then the flag has started to sort of stutter a little bit, for want of a better word. If you go down to the daily chart, let's just see. If we go into the daily chart, I really like the fact that this was the kind of the pullback, the bull flag, right end bouncing off the 50, and it worked its way up there. You can see, but actually now what's happening is we're looking as if gold is reversing and we're kind of starting to fall down. I think once again that is a reflection of the world's risk sentiment changing. Okay, the fact that there were events that happened in Iran at the weekend, but actually in some respects, market kind of shrugged them off. Okay, markets just basically continued to move higher. However, oil, which we'll look at in a moment, and gold, they have done considerably worse this week against US dollar rather than how they did last week. What I'm kind of intrigued as well to see is on that 4 hour chart. Yeah, you can see the 4 hour chart. It has just really been for 2 weeks. It's just been a bit of a downhill there, hasn't it? Just an absolute downhill. That's what we're particularly looking at. And it's no surprise that the kind of anything, the higher it rises, the quicker it can fall. That's just standard life, isn't it, for everybody? But you make the best of it. So, and that was particularly gold. Okay, I think we've looked at uh, most of those dollar pairs. So let us have a look at sterling. Let's see what's on there for us from sterling. Let's just see. Um, like, oh, so I don't know how you bet. I want to go to dollar first. So I'd like to go to dollar before from indices to sterling. Let's just work that its way up there. It'll show its way up in a minute. And that's my fault. Yeah, that's my fault for just basically trying to change halfway through. Apologies. Okay, so um, in the same way that I have profiles for indices, I also have profiles for my FX pairs, okay, and for equities, commodities, etc. And I have one for the dollar here. And so this is Aussie dollar on the weekly, Kiwi dollar on the weekly, Euro dollar on the weekly, dollar CAD on the weekly, pound against dollar on the weekly, dollar against Japanese yen, dollar against Swiss franc, and the dollar index itself. So this is a profile of the dollar against its majors. And once again, I want to be able to see, is there a clear trend? Okay, is there a clear trend? If you look at that, Aussie's up against the dollar, Kiwi's up against the dollar, Euro's up against the dollar, pound is up against the dollar. The dollar is down against the Canadian dollar. The dollar is down against the yen. The dollar is down against the Swiss franc. That should start to give you a very quick snapshot of where we stand with the dollar. But we're going to have a look at it a little bit more. So just When I'm looking at FX pairs, I always start with the dollar index. Let's go up to the weekly charts on that, okay? And you can see, that this for most part of this year, that has been really a very strong bear trend, isn't it? And you hear me say this week after week, okay? When your job is to find out if there is a trend, and if there is a trend, you want to be able to sort of ride it. You want to be like a surfer riding it, okay? That's ideally what we, looking for. And as I say, good trends leap off the chart at you. You shouldn't force them, but equally you shouldn't chase them. Okay, you shouldn't particularly look to fight them. Okay, when we're in a good trend, you're just looking for a way to consider them as a bit of a wave, and you're looking to surf them as long as you possibly could. The interesting thing about dollar index, and we can see it already, is kind of like breaking down there towards its lows. Just bear with me a second. Let's just put this onto daily and see what the score is here. Da, da, da. Excellent. So, daily chart. I talked about us being in a bit of a range there, okay, from like 98.50 to 100, just looking at that and hoping that, we'd see some clarity from that, but we haven't really. We had the low of a couple of months ago. Apologies once again on that drum, but hopefully you get the gist. Price pushed it, okay, and then we pushed up away from it. And then we had the ceasefire at the weekend. And actually, as people start to understand, well, that really accelerated the dollar and the dollar index even further lower in terms of actually how they look at it. That dollar, the dollar index is most definitely in a bear market. And I just say, don't fight it. Okay, if you're in a bear market, don't look to fight it. Okay, that's not it's not the smartest move. Okay. And here's the interesting thing, okay? This is the 4-hour chart. It's a good way to look at it. Okay, so after the events of about a week or so ago, we had a strong dollar week. Okay, people are moving into the dollar, and then we had the events of the weekend, and then we're waiting to see how does the market open up from sort of from Friday night to Sunday night. Okay, and what we had was we closed here on the Friday. We opened here on the Sunday, this kind of gap, okay, and initially people take that as a people take that as not the sort of kind of not the best opportunity, but actually it presents what is known as a gap trade. Okay, there's a gap here, and actually what you can see is that kind of came back and filled the most part of it, and then tried to push up, but then actually we reversed very strongly, and we filled that gap. Okay, bang, we literally filled it, and away it went. And as I said, this reflection here, in terms of I would have expected oil, gold, silver, dollar, etc., to have had much more volatile moves on Sunday, but they weren't, which is, as I say, is quite telling that the markets brushed off the sort of events of Trump's, like that actually the markets saw that as a they saw that as a relatively good thing. They didn't see it as it's spreading to a wider war, and that has kind of led to some elements of some of the risk on sentiment that we've seen these last couple of days, and I'll try and show you a little bit more of that in a moment. But certainly, dollar index, dollar is still very bearish, okay, and that's what we want. That's what we want to understand. We look at these big majors. So let's look at euro dollars. One of the it might be the biggest, largest, most traded product in the world. But you can see, from in the same way dollar index, okay, at the start of the year was at highs and fell away. The what we can see here with the euro dollars, we started weak, but we have strengthened. Okay, we really have strengthened, and we continue to strengthen. All right, even though that is a kind of inside box, right? We're waiting to see how that particularly plays out and carries on. As I said, this is only Wednesday. There's a couple of days left, okay, but if we are to hold up and close above the highs, okay, of the most recent high, that could be seen as a very bullish. I'd say that's a very, very bullish move. So we will wait with bated breath to see how we can make the most of that. So most definitely euro dollar, as you can see yourself there. On the daily chart, we were in a nice uptrend. We formed this bull flag. Bull flag ended with a bullish pin bar, which is what I like to see. And then you can see for the last few days, we have just continued to push higher and higher, and that's very telling. Okay, and the 4-hour chart, 4-hour chart, we gapped down. So we closed here on the Friday. We opened here on the Sunday. And there's a big gap there, and actually it filled, and that in itself is giving you an opportunity, okay, for some traders. Um, but yeah, that's what we saw across an awful lot of instruments. But as I said, we can see dollars weak, and against the other major currencies, it is particularly, it is particularly weak, and the others are very much stronger. If we look at the sterling now, and what I'm going to do is we're going to look at sterling, and then we'll look at UK stocks as always, okay, just to keep you updated on the major markets, major moves. If we look at sterling, sterling has been kind of an interesting trading phenomenon over the last month or so. Okay, it has there's been a great deal of swings and sometimes a great deal of confusion. But if you catch the swings right, there have been some great trading opportunities. Let's start with cable. So cable pound against dollar. This is the weekly chart. You can see what the euro is saying, that they basically literally did the same themselves. Okay, in terms of just as a big trend, looking to trend it, okay, looking to trend it, make it happen. And we can see this week, that is quite a that's quite a significant move. Okay, so as I said, I'll be intrigued to see if that stays till the weekend. I suspect it probably will in the beginning. But it is having an impact on sterling. The interesting thing was, I'm just going to zoom out here a bit because, we had basically looked at kind of, let's just see, what I had been sort of talking about. I thought that there was here we go, kind of almost like boom, there we go, almost like a rising wedge there on pound against dollar, rising wedge. And not unsurprisingly, it managed to fall out of the bottom of that, okay? Before it rested here on the edge of the 50. And this is once again a case of just trading bounces off the 50 like here can in itself be kind of useful. But we can see here that it just really pushed itself, the price really pushed itself much higher then. A lot of that is dollar weakness, okay? I would suggest more so than necessarily sterling strength. Sterling isn't weak, but I think an awful lot of that move is basically covered by the strength in the US dollar, or rather the lack of the strength in the US dollar. When we look at pound against Japanese yen, right, you remember as a risk-on currency, okay, we can certainly see that's occurred there. That's where we've been doing there. This was actually a lovely run. It was actually a really, really lovely, healthy run. And actually this was the bit that did the damage in terms of this has been the really strong move. This has been the real kind of risk-on move, pound against yen. You can see that actually, that has shown you that kind of risk-on sentiment. That's what it's interested in. If you look at pound against Swiss franc now, for those of you who join us on a regular basis, I'll go down to the daily chart. I talked about how effectively, the majority of the kind of Chinese market, a lot of Chinese that work, Chinese, the pound against the Swiss is invariably, it is a real proxy for risk at the moment. Okay, and I think that's what I've been saying the last couple of weeks, namely that basically, we've been in this box for about a month. So, and the way I looked at it was that, a move lower was a reflection of sterling weakening and Swiss franc getting stronger. That's risk off. Whereas if we kind of pushed higher, that is an indication of sterling strengthening and Swiss franc weakening. So we are risk on. Now, the interesting thing is that actually, if you look at the prices here, we've actually sort of shifted a little bit lower beneath the 50, but actually the overall price is, I would suggest, kind of bullish sterling still, bullish sterling from that. So this is a bit of an anomaly. I was chatting to some traders the other day about it. I wonder if I should maybe get a better line, but I wonder if this is a baseline here for pound against Swiss in terms of, do we get a kind of risk on bounce, or do we crack and break, in which case that could give us some well, I was going to say headaches, not headaches, it's always an opportunity, all right, but we'll have to wait and see how that folds. When I look at the ComDoles, okay, ComDoles is mostly bullish for sterling. You can see really if you're looking at over the last couple of weeks, but really the kind of major one, that's pound Aussie, pound Kiwi. If you're looking at the major one here, it is a case of pound against Canadian dollar. And what we have seen is that we saw, this is typical flag territory here. What I'm looking at is just basically yeah. So, we're in an uptrend. We form a flag. It has a bullish pin bar, and then we can see that basically, how have we done this week? Let's just have a little look at some of these particular numbers. 87.51 to 84.16. So, what's that? 330 pips. About 330 pips. That's quite some move. Okay, a lot of people will be happy just to get a piece of that. You can see that. We had that flag, and then we've just basically we've just blown hard and blown high, and a lot of that is to do with this was invariably at the start of those geopolitical tensions. Well, that invariably has an effect on oil. Oil has an impact on Canadian dollar. But then, as it just goes on to show you the reflections on the weekend's activities and how it's affecting events in the Middle East. We can see that basically pound against CAD has rocketed up, and that's a reflection of Canadian dollar weakening because invariably oil prices are dropping as we believe, right? As investors and traders believe that the ceasefire will hold. Okay, and that's what we're seeing there. Okay, in terms of that pound against Canadian dollar, has been quite some move. Finally, on the sterling, we're looking at euro sterling, and this is the weekly chart. Okay, I've talked plenty about the past, but what we saw was we had a low here in sort of start of this year, February, rallied much higher. Okay, strongly higher, fell back and actually started doing our work here at the 50 period moving average. And as I say, always keep an eye out. You want to see when charts start to flip. All right, okay, when they flip their the way they're operating. This is from dynamic resistance to dynamic support. We talked about it. That was the trade there. Okay, the sort of 3-bar reversal, bullish pin bar, and you can see on the weekly chart that has really continued to move quite nicely. Well, it's taken a little bit of a hammering this week, and I think part of that is perhaps to do with particular elements of the to do with some domestic issues here in the UK. But if we go down and look at this in the daily chart, what I'm intrigued and interested in is, we were in a nice downtrend. We were here at the 200 period moving average, and then we printed this real bullish key reversal. Remember, for a key reversal, price must push lower, but then reverses, rallies higher, and must close higher than the high of the previous candle, and that's what we did. And literally, that was our reversal, and invariably, you can see we've just worked our way up there. And that, once again, is also a reflection of that euro strength. But I would say, once again, that euro strength is a kind of reflection of dollar weakness. That is how I would probably be particularly looking at it and seeing how that particularly plays itself out there. So that's the kind of euro sterling party that we see there. Okay, so we've looked at the kind of trading pathway there. So what I'm going to do is I'm going to switch across to the investing pathway. I'm going to switch across to the invest.mt5 account and have a little look at what's been going on. So this is my MT5 account. As I say, I like to keep hard boundaries between my trading pathways and my investing pathways. That's what works for me. Others may differ on that, and that's absolutely fine. That's what makes the market. I'm just sharing with you how I like to look and operate. And remember, what you also have as a client of Admiral Markets is that you have the opportunity to basically have access to the research terminal. So there's a whole host of elements that are coming up here. I'm just going to maybe move that for the moment, giving us just the overall looking at the latest insights for primarily equities and what we're going to see from them this week. You can start to dig down into particular assets to see what the sentiment of them is and how you can use that to trade itself. There is literally a news screen that has all sorts of interesting news elements on. There is, of course, the calendar, and so this is where I start to get interested. I've got a couple of filters here. I'll just show you the kind of, here we go. Filters to basically look at particular regions, so EMA, etc. That's what we're looking for here. Let me just clear that down. So, this week has been relatively quiet in terms of UK corporates releasing their data. The kind of one we are interested in here is 3i Group. Okay, and the great thing about this is you can just look into 3i Group and have a little bit of what's the word? A little bit of background, okay, a little bit of news about the specific stuff. You can, if you have a good plan and that you're working to it, you actually have the position to put in the ability to trade, itself straight away, which is very nice. But personally, I still like to look at a chart. I still like to let price action lead the way for me. But certainly, 3i is they've got their AGM to tomorrow. That's what we can look at there, and maybe we'll have a little look at that, the how they are bearing up themselves, and if they are actually on the particular chart we have at the moment. So yeah, lots of data there that you can take aboard and use it if that is your preferred way of engaging with markets. So just bear with me a moment. Let's have a little look at see if 3i is one of the available stocks. It might not necessarily be so. I'll just have a little look. It also could be that I haven't set mine up correctly yet, which would not be the first time. Okay, so yeah, not really particularly looking at there, but that is okay because actually what I want to look at is the next thing we look at is Babcock. Now we looked at Babcock a couple of weeks ago, and I talked about how they were supremely effective in the defense world. Okay, they had the major infrastructure projects, and they also have access to defense and access to working in nuclear, two areas which are kind of growth areas in this present government in the UK. So here we go. Let's have a Babcock there. Let's have if we can see bang. But let's have a chart from that. Just bear with me 1 second. Babcock there. Yeah, well, as you can see, they're up today 11%, which is not to be sniffed at, ladies and gentlemen. So let me just put these on here. We can have a little look at a few things. Okay, so that's the hourly chart, but monthly chart. You can see we talked about this. This is just reversed around. Okay, from Babcock, from them being at a here we go. Let's just get rid of these now. From being quite a downtrend, all right, from 2015 to 2020, we can see we turned around here, and we ground away up. But as we ground away up, we've just accelerated our way here, and today, has just been a reflection of this year being absolute gangbuster. So we have. Let's just pull this down here for um, we're looking at trading it to kind of 450 area to 1150. So we've gone through basically getting towards a two and a half fold move. Okay, it's doubled and more. But you can see for yourself that has been quite some move there, hasn't it? And if I go into the weekly chart, we can see it pulled back as during the liberation, but then invariably you can see that actually from that lows in April, we've just launched ourselves much higher there. I mean, that has continued to do it, and as I said, their numbers are exceptionally good today, hence why we've drifted a few days before, we've popped and we've dropped in terms of just pushing our way up there. That really is quite something in terms of the move. Even on an hourly chart, it's really moved on. Yep, there's been a little bit of sort of profit taking at the top, but that's still quite some significant move in the Babcock. So you might, as I said, you might want to add that to your watch list at the moment in terms of places that you could particularly watch. Another kind of defense project, and it's kind of interesting, is Kinetic. Okay, Kinetic, they are another sort of defense research company. And what we can see is that we bounced off the sort of, well, in fact, actually, let's just bear with me a moment. Let's just start to let's just okay, come on. Yeah, what we were looking at is Kinetic, another defense company. They had a huge swing, followed by a huge fall, followed by another huge swing. It's really become a very, very volatile stock. Okay, a very volatile stock, and we can see even though we pushed to highs, and even though the defense stock is very hot, we can see that we've had three failures in terms of trying to prosecute the individual. And so, so if you look at this, kinetic being part of, if you look at kinetic in terms of defense, it has had a great run, but you can see that actually it has just drifted a little bit lower there, hasn't it? Just drifting a little bit lower in terms of the kind of, if what we see is true coming out of the Middle East in terms of that Iran will be sort of knocked off the board, well then that has huge sort of repercussions in terms of just overall Middle East peaceness, and that could have a massive impact. We look at the kind of the defence expenditure and nuclear expenditure. Well, we can see Rolls-Royce continues to grind its way higher there, right? And that's just been quite some run this year there, hasn't it? Just absolutely shocking there. I'll be intrigued to sort of look at how, having done some fantastic runs, I'll be intrigued to see, what the procedure is for, for dealing with it. But I think, Rolls-Royce, I would just be keeping an eye on that. Is it a case that it's ready to sort of fall apart, or is it fall over? Is it ready to just continue? The thing about Rolls-Royce is it still remains immensely popular, all right, immensely popular as a stock, both in terms of its let's say its aero engine section, but also in its access and to nuclear, which of course is now the favoured way, or kind of one of the favoured ways for energy production here in the UK, and that is just Rolls-Royce just continues to do well off it. Okay, there, ladies and gentlemen, let us draw as a close to there. Unfortunately, time flies when you're having fun. We tried to cover a lot there. I always try to cover as much as I can and share with you as much as I can. But I hope that has given you some help. I hope that's given you some insight into the markets and how they are playing up on what has been a really sort of eventful week. Always, okay, I wish you the best of success in your own trading and investing endeavors over the next week. Have a fabulous week, ladies and gentlemen, and I look forward to speaking to you next Wednesday. Trade and invest well, everybody, and we'll see you then. Thanks, everybody. Thanks for the kind words. Thank you. Have a great night. Cheers.